Hey guys, how are you doing?
Hi, Anna. We're fine. How are you?
I'm doing good. It's close to Saturday evening here. The party bells are ringing now.
Yeah, thank you
I
so
hope
much.
you guys are having a good afternoon.
Yes, we are. We are. Thank you so much for agreeing to do this. We really, really appreciate it. I'm sure definitely more people are going to come in. So yeah, just a quick brief to our participants. Anand is although I feel like Anand is still going to, introduce himself to us, but Anand is an expert when it comes to blockchain. And I'm sure everyone has their questions, wrapped up somewhere that they're going to ask. So do feel free to ask as much as questions you want to ask. And yeah, Anand, over to you. Yeah, let's start the webinar.
Sure. First of all, thank you for giving me the opportunity to talk about. I am really, what do I say? It's a wonderful opportunity to interact and share the knowledge. I'm sure, it will really help for the participants to understand it better if I'm able to inculcate some sort of knowledge. And thank you again for coming. So I'm Anand. I am a classmate of Coco. We studied together at the university. We were classmates. We both studied masters in financial technology, and I am actually like ever since I came to study about blockchain. I was quite fascinated. I wanted to study more about it, and that's what I'm doing these days as well. Uh, I am no expert at it. I'm still learning, and I like to share one. So thank you for joining in. I hope you guys learn a little more. So if it's okay, should we wait some time for people?
Yeah, and we can just go on. I think since it's recorded, people can join in, and then since it's recorded, we can always upload it, and then people can ask their questions later on. But I'm sure that as the session goes on, people are going to join in. So I think you should just start. Yeah.
Sure. I'll start sharing my screen. Let's start. So today I'm going to talk about blockchain. I'm going to talk about I'll take you through the brief introduction of blockchain. Uh, the agenda for today would be what is blockchain? I'll talk briefly about the underlying technology. I'll take up a couple of use cases. I'll talk about cryptocurrencies and the way forward. So, what is blockchain? Before I start onto it, before I start what is blockchain, can I have a couple of people, a couple of volunteers who can tell me what do they understand of blockchain? How does the term blockchain resonate with them? Uh, can I have somebody who can share?
Easy. See, I think we should all just go and face our French classes.
I'm telling you,
The French class. Face the French class. Forget the English.
see, I'm this French.
It's one difficult thing. So my plan is once I finish.
Hi, Basi. Hello, Basi. Please, can you mute your mic?
Oh, sorry.
Okay. Sorry, Anand. Yeah.
No worries. I'll just So yeah, I was asking if I can have somebody who can tell me a little about it so that I can pick it up from there. So never mind. So what is blockchain? blockchain is, if I put it simply, it is a chain of blocks wherein each block is connected with the preceding block through some sort of a program or some sort of a cryptographic chain. It is indeed the technology behind all these bitcoins and other cryptocurrencies. But what stands out for me in blockchain is that it is faster, it's more, it's secure, and it is to be more transparent and democratic. From my point of view, blockchain is a digital, shared, immutable, distributed ledger, wherein all the transactions are chronologically recorded in near real time. It is a ledger. Ledger, I suppose most of you would be knowing what a ledger is. It's nothing but a transaction log wherein we have all the details of the incoming and outgoing of a business. It is shared, as in it is shared between the participants of the network, so that everybody sees the same set of transactions. Everybody has the same copy of the ledger. Thirdly, it's distributed in nature, which means that there is no single point of failure. Like everybody has the same copy, and so that there's no single point of failure into it. I'll just brief a little more on the distributed ledger versus a centralized ledger. Even as you can see in the diagram, a centralized ledger, here what happens is that there are central authorities which actually help in realization of a transaction. There are a lot of intermediaries involved, and the whole process is a little longer or time consuming. Whereas in case of a distributed ledger, there is no central authority. That's how the term disintermediation became synonymous with blockchain. There is no intermediary involved. Everybody has the same set of information, and the trust between all of them is enabled through a cryptographic algorithm. So if I have to quote, blockchain is a protocol for exchanging value over the internet without an intermediary. If you feel, if you have any questions, please pause me in between. I'll be more than happy to take up questions. I want to keep it, the tone of the whole thing, I want to keep it more conversational. Let's not be very formal. So I'll accept questions in between as well. Technology. Let's talk about it. What's the underlying technology behind it? So Merkle tree or a hash tree or a binary tree, it is at the heart of the blockchain technology. It is nothing but a distributed data structure wherein each data block is grouped with another. They're grouped in pairs, and every data block is encrypted through a hashing function. So hashing helps in faster processing of the data. Here, as you can see, this hashing continues all the way up till the root node. The advantages of a Merkle tree is that one, it imparts immutability. Second, it provides a proof of the ownership. Knowing the root member will enable you to know all the members of the chain. So, how does it help in how does it help in immutability? Say, I have these data blocks over here. Say, if you want to change the data over here, so originally this hash was comprised of the hash of this data block and this data block. If you change the data here, the hash of this block gets changed, which effectively changes the hash of this block. This block and this block combined form the hash of this block. If this changes, this also changes, eventually this changes. So in short, if I change a particular block, once it's published on the chain, I'll have to go all the way to the root block to change everything, which makes it immutable. It cannot be changed once it's on the chain. Another concept I want to highlight over here is, how does blockchain impart trust to the whole network? It engenders trust through these four functionalities: consensus, provenance, immutability, and finality. I just spoke about immutability. Like, once a transaction has been stored on the blockchain, it cannot be edited, deleted, or have transactions inserted before it. Through the use of Merkle tree, we know, like, if I know a root member, I can trace back to its parent block and subsequently to the genesis block. That is nothing but the provenance, a complete history of all transactions. I can track back to the first block. What is consensus? Consensus is the process of agreeing on new transactions. Like, it's a kind of a protocol which the network members uses to uh, to finalize on a particular block. Like, there are several consensus mechanisms. Like, for instance, blockchain uses proof of work, Ethereum uses proof of stake. There are others, uh, proof of Byzantine fault tolerance.
Yes,
Hello.
I can hear you.
Am I not audible?
Small left, like not a full one. I only have parts of one left.
Hi, Farida. Sorry, it's you. Okay.
Am I audible?
Yes, you're audible. You're audible. She
So,
said you should go a bit slower so that she can fully understand the concepts of blockchain. Yes.
Sure. So, anything you want me to cover again? Should I go back to the previous slide and
I think this is fine. If she has any questions, she will ask, but this is fine.
Sure.
Thank you.
As I was speaking about the consensus, several consensus mechanisms. Roll back. So you can think of blockchain as a append-only data structure. You can only add. There's no way you can go back or modify or change a transaction. This is a pictorial view of a block, how a block looks on a chain. So I've showed 3 blocks here. This is the block structure. Like, it has a block number, there is a nonce, this data, and there is the previous hash and the current hash. So what I want want you guys to focus on this diagram is that the previous hash here in the block 3 is same as the hash of the block 2. So effectively what happens is, say if I have this block, the hash of this block will comprise of a couple of parameters. First, the hash of the previous block, the data. Data is nothing but the set of a bunch of transactions, a nonce, and a block number. So when we have the previous hash incorporated in the hash of the current block, that's how there is a sense of continuity or a sense of connectivity amongst the blocks. Everybody is able to understand?
Yes.
Sure. So data is nothing but a set of transactions. The previous hash is the hash, the block header of the previous block. The hash is the header of the current block. And nonce. So nonce is we can consider nonce as a randomly generated number. It is something which comes in the context of the consensus mechanisms. I won't be going deep into it, but for simplistic understanding, let us consider it as a randomly generated number. Types of blockchain. So basically, there are two types of blockchain: public blockchain and the private blockchain. Public blockchains, as the name suggests, they are fully decentralized and transparent. They are public and open networks. What happens in them is like there are, since they're open networks, a lot of people, a lot of participants join in. So it becomes almost impossible to infer any particular participant. Because in a blockchain, say if I have joined a network, so I won't be joining in with my, I won't have a username or an ID. Everything would be encrypted. So my identity is encrypted. So when there are lots of people, like in the example of say a public blockchain, say a blockchain or an Ethereum, it becomes nearly impossible to infer anybody like that. Whereas in case of a private blockchains are somewhat centralized. They are private and closed networks. The network members are known because there is an administrator who will create a blockchain network, will create a group of individuals who would be participating in this network. So people know about it. They would still be their identities would still be encrypted, but in a closed group you would know. Examples of private blockchains are Hyperledger Fabric, it's Corda. So private blockchains they are the ones which focus more on enterprise level. Say for a company which is doing some sort of a project, so only the people within the company would be involved in it. So that's why they call it private blockchain. The key features of blockchain or the uses of blockchain. So as I have like discussed earlier as well, transactions are happening in near real time. There is no intermediary. It is a distributed ledger, these kind of things. But what are the uses of blockchain? I would say the uses of blockchain differ from case to case. It's not it's not ideally the case wherein you can simply decide and use blockchain. It depends on the particular set of requirements. Say a situation wherein you have lots of data involved, you have multiple participants in the whole life cycle. There are a lot of handshakes. Data has to go through a lot of systems, and integration of multiple functionalities is required. These kind of situations are the perfect setup to use blockchain. I'll discuss about it in the next section. The blockchain use cases. Before I move ahead, if somebody has any questions, please feel free to ask.
Okay, so I have a question. Alan, yeah, I have a question.
I'll move on to the use cases.
Hello, Anand. Hello.
So here I've highlighted the use cases from a financial sector point of view. So I've broadly classified the use cases as capital markets, insurance. I'm sorry.
Hello, Anand. Can you hear me?
Yeah, please.
Okay. I wanted to say I have a question. Earlier on you mentioned
Public sector. Hello.
Hi, Anand. I'm so sorry. Had some network glitch and all that, but not to worry. The recording was
No worries.
not tampered. Yes,
No
just a
worries.
question. I wanted to ask about how we can incorporate blockchain in other areas. I think that's what you're actually talking about. Uh,
Yes.
like this, so you mentioned earlier on about hashes, the connection, what happens underneath, like the technology underneath. So I just wanted to ask, like, is there any software one can actually use, to push in blockchain? We're just saying, oh, blockchain, blocks and all that stuff. So how is there like a software one can use and all that? That's just a
Yeah,
question.
definitely. Right now, what's happening is we have a lot of platforms to
Okay.
where is it's more like plug and play kind of a situation. IBM is one of the organization which is developing a lot of applications on blockchain.
Okay.
Hyperledger is one of them. R3 Squad is one of them. So uh, I'll just talk about one example, say wherein IBM has developed the platform, and participants can uh, they just connect through the APIs and start the transaction. So there's this product called IBM WorldWire, which is used for global payments. So just instantly transferring money from one country to the other country. So they have set up the platform. One what they do is say say any two particular banks, they do not need to say actually develop the blockchain application. They'll just connect through the APIs which the IBM folks give to them. They'll just connect through the APIs and they are on air. So there are a lot of applications, a lot of organizations are working on simplifying the use of blockchain, and so that it can have a deeper penetration and a deeper reach. Like say if I want to say as an individual I want to develop an application, I need not go into the technical nuances and create the whole network on my own. I can just simply check out, say, one of the Hyperledger projects. Like Hyperledger has multiple projects under its umbrella. I can just have a look at which is the best project for my particular use case, and I can just uh, plug and play through the APIs. So that's how it is. And that's how organizations are solving the or creating the accessibility to the entire blockchain network.
Okay,
And
Anna, thank you so much. I truly understand. Thank you.
thank you. So I was talking about the land registry over here. So recently, Estonia, a country in northern Europe, it is the first country to which has gone completely which has gone completely digital. They don't for all sorts of legal documentation or government documentation. They use digital documents. They are heavily backed up on blockchain technology. Another example of a use of public sector blockchain is a use of blockchain in a public domain is this country called Honduras. In 2015, they announced that all the land registries that will happen there, they'll all happen on a blockchain, no paper involved. So there are a lot of use cases which are from a non-functional, non-finance background as well, wherein we can understand the use of blockchain. Just that in this non-finance domain, we are more concerned. We are more we focus more on the transparency and the entire supply chain life cycle of it. So next topic, I'd like to move on to cryptocurrencies. I know any sort of a discussion on blockchain can't be complete if I don't talk about cryptocurrencies. So I'm sure most of us came to know about blockchain through cryptocurrencies. Bitcoin was the first uh, the first experience that we had of this technology. But honestly speaking, cryptocurrencies have taken up have overshadowed this technology, but these weren't meant to be like that. Cryptocurrencies were more of a byproduct of the blockchain. So in case like for blockchain, the tracking of the asset from one source to the other, the inherent currency that they use, that's called Bitcoin. Similarly, in case of Ethereum, the inherent currency that they use is called Ether. I'll first talk a little about blockchain. So this is the actual paper that was published in 2008 by Satoshi Nakamoto. He or the group is an alias. We still do not know about the real identity of this group. But in 2008, they published this white paper, Bitcoin, a peer-to-peer electronic cash system. So this introduced the concept of blockchain, and it introduced us to the concept of Bitcoin. This white paper is freely available over the internet. I would suggest everybody who's present and whoever sees this presentation, kindly go and have a read about it. It's a fairly small paper. It's not very complicated to understand. It talks about say a little bit about the technology and the problems that this technology, blockchain, is capable of solving. Some fun facts. I think that this would be really funny. So Bitcoin is limited to 21 million. So there won't be any more coins than 21 million. That's the cap supply of Bitcoins. And as of now, we've already created 18.6 million, which is almost 89% of the total supply. But Bitcoin will be mined in the year 40. That's a long time. That's because the whole process of trading Bitcoin is getting difficult day by day, and the curve has actually flattened. It is getting difficult to mint more coins, but it is continuing to be minted. And the last Bitcoin supposedly be mined somewhere around the year 2140. A new block in Bitcoin, a new blockchain is published every 10 minutes. So that's how long for miners to their block and put it on the blockchain. Bitcoins are deflationary. What it means is like the reward for getting the Bitcoin is cut in half after every 210,000 blocks, which is approximately 4 years. So anybody who's strong with calculations here can calculate it. Like 210,000 blocks, every block is created in 10 minutes. So divide it by 10, and when you convert it into an equivalent time, you will find out it's somewhere close to 4 years. So the last price cut that happened, the last cut in the reward that happened was in May last year. The current reward for publishing a block is 6.25 Bitcoins. Again, once the 210,000 blocks are created, it will get converted into half again, 3.125 Bitcoins. And a Bitcoin is divisible up to 8 decimal places, the smallest denomination being called as Satoshi. So before I move on to the next cryptocurrency, does anybody have any questions about it? Anybody having questions about Bitcoin?
Yes. The point 3 says the last Bitcoin will be mined in 2140. What does that mean? Is it that we won't have Bitcoin anymore, or we'll have enough to serve everyone?
Can you repeat that again?
the third point there says the last Bitcoin will be mined in 2140. What does it really mean?
So what it means is, like, when the when the blockchain started in 2008, the mining for bitcoins started from that point itself. So how does a bitcoin how is a bitcoin created? I'd throw some light on that. So what happens is, like, there is a group of individuals called miners who are constantly solving a puzzle to publish their block. Say we have a group of 8 people over here. We are all on the blockchain network, and we are all performing some sort of a very complex mathematical computation to solve a puzzle. And what happens when say, if I solve the puzzle the first, so I get to publish my block on the blockchain. So it's a time bound activity. So say if I am able to publish my block, I get the reward is economically incentivized in the form of bitcoins. And when this whole blockchain network initially in 2008, when it was started, the Satoshi Nakamoto had given a upper cap on the coins as 21 million. So there won't be any further coins. So effectively, the mining for Bitcoin will stop once it reaches 21 million. We'll still have it in the trade ecosystem. We'll still be able to like trade on exchange, but we won't be able to mint any more coins. And say when it started in 2008, the price for publishing a block was 50 bitcoins. After 4 years, it got reduced to 25, then 12 and a half. Currently, it is 6.25 bitcoins. So, whosoever solves this puzzle, the first of this publishing the block, they get bitcoins. So say currently every 10 minutes there is a block being published, and the miner who publishes that block gets 6.25 bitcoins. And once this limit of bitcoins, which is currently at 18.6, like 18.6 bitcoins, 18.6 million bitcoins have already been generated. Once it reaches 21 million, it'll stop. But the point to know why do I say like the last Bitcoin will be mined in 2140 is, it was very easy initially to solve that cryptographic puzzle. But now, as we are moving forward, with every passing day or every passing block, this difficulty level is increasing. So that's why the whole process of mining is getting difficult, and that's why it's going to take the process of minting the bitcoins will get slower and slower. That's why the last Bitcoin will be mined in 2140. Am I able to answer?
Yes, thank you very much.
Thank you. So next I will discuss about Ethereum. What is Ethereum? Why did it come into picture? So Ethereum was again a white paper which first came into existence into 2013. It was published by Vitalik Buterin. He's not an alias. He's a regular guy. You can Google him and find him. So he was He was one of the initial contributors to the blockchain code base. But working on blockchain for a couple of years, he understood the shortcomings of blockchain. He understood that blockchain is not versatile. It's only for it's only to track the assets, track the financial assets. It's only Bitcoin can work over there, and you cannot modify it in a way to use it for your own advantage. So he came up with this white paper in 2013, and eventually in 2015, the first block for Ethereum was mined. So he imparted the concept of a smart contract. Effectively, blockchain became programmable, malleable. You could develop applications on top of the blockchain. Communities, organizations, they could use the underlying technology of a blockchain and develop their own apps, decentralized apps, dApps as we know. So that's when, like in 2015, with the introduction of Ethereum, that's when a lot of companies and a lot of organizations started taking notice of blockchain technology. When it became like, when they started to understand, like, okay, we can use this for our own process improvement, for our own use cases as well. And it's not just limited to financial ecosystem. That's when that's how Ethereum started. And why does it matter? Like, I want you guys to focus on the market cap over here. It's for the market cap for Bitcoin is 637 billion. That's more than many of the traditional assets that we have in circulation right now. Market cap, market cap. What does market cap means? It is a product of the current price and the circulating supply. Circulating supply, as I just mentioned in the previous slide, 18.6 million bitcoins are already into production. So this is why it is important. There is a lot of money involved in the whole trade ecosystem with Bitcoin and Ethereum. Ethereum and Bitcoin being the topmost cryptocurrencies in the crypto universe. There is something as Wall Street bets as well. I'll be honest, it was not on the Coin Matrix website till a couple of days ago. It just popped in. I am not sure what it is. It looks like there's a photo of Donald Trump. I'm not sure how authentic it is, but it certainly shows up there. I'm still to learn more about it. That's why they have not. I think they've not put a number to it, and they have started as well. New cryptocurrencies keep on coming. Like as I know, there are already around 2,000 cryptocurrencies into in the crypto universe. So it does involve a huge chunk of money, and that's why there is a lot of talk about Bitcoin and Ethereum. People are following the stock exchanges very closely. There are a lot of studies happening to understand, what drives the prices of these cryptocurrencies. Are they in anywhere? Are they related to any of the stock exchanges or any sort of traditional assets? There are a lot of studies happening to predict the price and understand its volatile nature. So that's why it is important. The last section for today's presentation, the way forward for blockchain and cryptocurrencies. How do we proceed, and what's being done to take it further? That's how the adoption curve looks like for blockchain. It was in 2015 when we started off with Ethereum that that organizations started taking a notice of it. Like they came across, okay, so this is some kind of a technology that we can focus on, that we need to consider. Subsequent years, 2016 and 2017, there were a couple of early adopters, say like IBM was one of them. Hyperledger from Linux Foundation was a couple of these were the couple of organizations which started working on it, which did a lot of research and development onto it. Currently, we are in the growth phase of blockchain. So we are in the age of enterprise blockchain, and how we perceive in the coming 5 years is like we certainly hope that this technology matures and it touches more use cases and more sectors wherein it can be adopted. this is the third generation of blockchains that we have right now. The first one being Bitcoin, the blockchain, the original blockchain. Generation two was called as Ethereum when it became from a simple blockchain to a programmable blockchain. The concept of smart contracts came into picture, and now we are into enterprise blockchain. A lot of companies are investing. There are a lot of companies are creating platforms, as I mentioned earlier, like simple plug and play platforms, so that it can be accessed by a lot of other players as well. Well, this is a kind of a marketing slide from my side. I recently, in last year, I wrote an article on blockchain. From its inception to now, it talks about the evolution of blockchain from 2008, and from the upcoming of Bitcoin, the shortfalls of it, how we moved on to Ethereum, what were the challenges we faced in Ethereum, and how blockchain looks right now. So this is available on Medium. Feel free to go and read about it. I would be very happy if I receive some comments, or if I can receive some inputs. If you have any ideas, please revert on that. And the last slide we have today is enterprise blockchain. As I was speaking, we are in the third generation. We are in the age of enterprise blockchain. I have listed down a couple of blockchain consortia here. Hyperledger is one, Enterprise Ethereum, R3. Then we have VTrade, Marco Polo. There are a lot of consortia, and they're all working on different use cases. Like within the Hyperledger umbrella, we have a lot of different products. Hyperledger Indy, Hyperledger Aries, Hyperledger Sawtooth. They all belong to a separate or a specific use case. The earlier example which I took of CBDC Bakong, which was in Cambodia, they use Hyperledger Aroha as their blockchain platform to develop and implement their product. TradeLens is one for which is with IBM and Maersk to track the whole supply chain of shippings across the globe. We have Marco Polo, which is into letter of credit and receivables. So there are a lot of enterprise blockchain. There are a lot of consortia coming up, and I hope you were able to connect and read with it and get to know better about it. So any questions here?
Anand, just a quick question.
Yes.
So what is the most commonly used enterprise blockchain that we have? And if I were to use blockchain in probably delivering financial services or in the banking industry, because I understand that a lot of our, everyone is going into blockchain because of the underlying of the technology, of how secure it is, of how it has really helped cryptocurrencies and all that stuff, of how it has been secure and everything. So now I want to understand, bringing it down into the financial services industry, how transactions can fail for fraud, that kind of thing. So if I were to, let's say, for example, I want to use a blockchain now, to incorporate blockchain into that kind of industry, or a fintech, which would you advise?
So again, there are a lot of organizations which can benefit, which you can look up to. Hyperledger is one of them. Then IBM is doing a lot of work in both in finance and non-finance. But practically, from my experience, what I have seen, in terms of if I have to use solely for a financial use case, companies usually prefer the Corda application from R3. So it's very much focused on only on the financial domain. R3 Corda, that's the application that we have. There are a lot of use cases onto it as well. You can check the website of R3 and relate to which is the closest use case to your use case, and you can use it. Also, like IBM also provides a lot of IBM provides a platform wherein you can just develop your APIs and connect your APIs with the IBM platform's API, and just start with the financial transactions that are happening. And the second part of the question, like how does blockchain help in the fintech domain? So for that, I would say, like, in terms of when we talk about finance, there are a lot of aspects which we are concerned about, like traceability of the asset. We should be we want a network which is transparent, so that we can track the origin of funds, and at whatever point in the life cycle it is, we want to make sure that there is no money laundering happening. So these are all the checks which we can put in the smart contract, which gets published on the blockchain. So which makes it very which makes it kind of indispensable in the fintech domain to not have a look at the blockchain application. That's all.
Oh, thank you so much. Thank you for that interesting explanation.
Thank you. So with this, I have come to the end of today's session. I would like to thank you all for being such a patient audience, for listening, and I hope I'm able to impart some knowledge. I'm sure you must be knowing, but if I'm able to add to a little bit, it'll be a pleasure for me. If you have any questions, please feel free to ask, or if not now, you have some questions later on, you can connect to me on LinkedIn or say any of the social media platforms. I'm available by the name of Anant Avinashi. Coco can help you connect with me. It was wonderful talking to you.
Yes, and it's so nice to have you talk to us. It was really insightful. Hannah also says thank you very much in the chat session. Agbara also says thank you very much. So yes, we are very, very grateful. It was really an enlightening presentation, and we look forward to using blockchain in our various businesses.
Certainly, I wish you all the best.